20th October 22, Thursday. Wow, yesterday was a big day, do you know that? Yesterday was a special day, 19 October. If you remember what happened in 19 October 1987, you will have some breeze down your skin, right? But the thing is this, today is not about that day because it has over and nothing has happened. But the more important thing is, can't fight Mr. Yen. Oh my god, Mr. Yen is damn good, okay? He gave a call back in May that he expected the yen to go to 150, and that time many people say no. Now that time I went through his view and I kind of believe in it, but of course I didn't really follow through. But when the price go to 140, I know that 150 was coming in, alright? And I believe now 150.62 could be next. Alright, let me share with you in more detail. But once again, disclaimer applied as usual, and of course, thank you Ames for the kind sponsorship. Now, what is 1987 back here? Now, during the year 1987, October the 19th, all right, we have the stock market plunging 508 points. Now, of course, at down 500 points is nothing, but you must understand that back then itself, right, the Dow Jones are only at 2,000 points. So that means that a 500 point drop is actually equivalent to 22.6% drop. So let's say put it today's number, and let's say today's number is 30,000. To drop by 22.6%, my goodness, the market must wipe out at least 6,400 points in a single day. Now, the biggest drop we ever seen in the market is about 1,800 points, if I'm not wrong. So 6,000 points is going to make everybody flip, alright? So during the time itself, it was so bad, and you can see that in the past, this is how people gather and they trade. Nowadays, you notice that all are done by algorithm, and that is where my worry is. Because as more computer software get involved, then it's very easy to create a potential capitulation. And of course, we can see what happened back then. You can see what happened during the crash in 1987. Alright, the market was really coming down bit by bit. Then on 16 to 19 of October, that's where the cascading effect came in, and wow, it went crazy, okay? And at times, CBOE has to suspend trading several times. It happened before, right, in 2020 during the pandemic time. But again, I say it's all over. Nothing has happened. Let's continue. Now, in May 2020, Mr. Yen already predicted that it may weaken to 150. And the last time we saw this was in 1990s, okay? And this is an article back in May 20th. Mr. Yen, alright, his name, excuse me, my bad, I'm having bad sore throat today. Okay, he's saying that, right, okay, he basically he believed that he was a previous vice finance minister, and he believed that this yen is going to go down further, okay? At the time he said this, it will likely hit 140 to 150 by end of the year, which is totally spot on. And of course, he also mentioned that if it hit 150, the Bank of Japan will be somewhat concerned. Okay, so this is the last time we see yen at 150 back in 1990s. So after about how many years? 32 years, we are back here again. That is how bad it is. And of course, if you actually read the article, you'll notice that several chief currency strategists, like from excuse me, my bad. Okay, social that came in and says that, right, they disagree with him in a way. They're looking at maybe 135 maximum top. And at the time, they also say that they don't expect the treasury yield to hit 3.25%. But today, we have 4.1% right now. So you can see that, everybody got their own view. And at the end of the day, you just had to follow through. And of course, the thing is that if you follow him, that's a big deal of money. So is he going to give any prediction right now? I don't think so, because 150 is somewhere he has mentioned. And of course, thank you once again for those who are pretty fast with that. They also realized that Kel also said this, right? Back then, the yen was trading at 142, 143. I gave her forecast. I said that it would go to 147. That was 1 month ago. And how I get that 147? Well, back then I have my BMB structure here, and it says that if the yen can basically move up, it will hit 147.73, and that was what I mentioned about 1 month ago. And now we are already at near 150 level, and people are getting worried because they are waiting for the yen traders to come in. Now, I don't think they will come in at 150, because if it's so open, usually it won't happen. Only when people say, "Oh, what happened?" Nothing happened, and then then when people are like, okay, complacent, they think that no longer this problem, they kind of buy in, that is where they come in. So I feel that it will go much higher than this right now. So based on my chart, you can see right over here. So let me explain this to you. Yeah. Now yesterday I apologize. There's no time for me to do my charting, but you can see right here. Excuse me, my bad. Oh dear. Okay, I have a very bad sore throat now. Apology on this today. All right, we have it right now. Now you can see that this is what happened. Now, okay, I was calling for a buy around this area, okay, and then what happened? The market went up. That was cool, right? About 146 level. Then suddenly there was a BOJ intervention and the price came down. But you look carefully, right? When this happened, my indicator tells me that the boys are buying. They're not selling. Even the weightage tells me that the buying is still there. So that's the reason why the next day I was telling my friends, look, if you don't mind taking a little risk, buy into the dollar yen, because I believe it will go up. And truth be told, about 14 days later, it hit my target of 147. Wow, okay. But if you look carefully on my screen here, my boys indicator are still buying. Weightage have increased, in fact. So this is a very strong buy. And you can see over here itself, right, the weightage from buying to negative or flat turns back to positive. That's why this is a very strong buy in the market. So anyway, now my point is this, based on my indicator now, the next target is 150.62. And I think that if 150 breach and there's no sign of intervention, 150.62 should be able to be touched by probably this week. All right, so that is how I see on this chart using my TWB chart. If you find this indicator interesting, contact us. All right. Okay, now let's look at Tesla. It's going to be a make or break for them. Now Tesla revenue came out and it misses forecast. Okay, and there are basically demand issues in the earnings, and of course Elon Musk struck off this demand fear because apparently the main thing was a bottleneck issue. But still, Elon Musk promised an epic year. So the thing is this, okay, we all know that the chips is an issue, and of course China is an issue, and the Europe side, the factory was an issue. So overall it's alright, they missed the forecast as expected, but that is not the main drive for today. The main thing is this, guys. This is going to be the main point, whether Elon Musk need to sell his shares so that he can buy Twitter. Now if he say no, wow, straight away we're going to see 237 coming in easily. Okay, now if let's say Elon Musk say I have to sell, bang, this share will hit 206, and if it get worse because of some more selling, we may see 189. Okay, so you must really listen to what he had to say, and I'm quite sure that in a few more days he has to announce. So once he gave any indication, you have to watch. Now the volume has been really coming down, and that is not a good sign. So guys, watch what Elon Musk has to say. But if you ask me, even if he say he doesn't need to sell, right, I think 237 will be a interesting resistance to watch, okay, because overall it's still about the company. Okay, now Apple. Okay, now Apple, we have a bit of issue right now. Apple, let me just do this. I think that I missed out the PowerPoint here itself. Let's do me a favor. Okay, let's take a look here. Now Apple, big problem. Now, Apple has cut production of its iPhone 14 Plus according to some information. Right, why is that so? Because there's sales issue. Sales issue, obviously. Now, I've been saying this for some time, and of course some iPhone fans was not happy with it. But remember, I told you guys they would not get what they want. So now they are really confirmed cutting production. And this is not good because you can see over here itself, some strikes are happening in Australia, and because of the Japan and China tension, all this thing is weighing down on Apple. And because of that, you can now take a look on Apple shares. Okay, let's take a look right now. Now, Apple shares this morning, last night, gapped down first and it got pushed up. Okay, but the volume is ridiculously low. This is not a good sign. Okay, it's not a good sign. So 147 will still be my resistance, but I still believe that Apple is going to go down to 133, because we all know that every time when Apple shares goes up, it's all primarily because of their new product. But this time now, 14 Plus, I believe is a big issue. In fact, I saw some news saying that they're cutting half of the production. So imagine when the market pump up recently was because of this iPhone 14, and now they're going to cut down by half, then 133 is not too far away. And of course, if I can get a 129, it'll be even better. Okay, so think carefully, guys. Go slow with Apple. Okay. Now, if you use my TWB chart as well, I want to show you about how I view on Apple. Now, based on this right now, Apple, based on the upside, right, 152 is the based on TWB is this target. But if you're asking me, it's alright, likelihood 136 should be the one that I'm looking at. Now my boys indicator is selling and there's lowering of weightage on it itself. So once Apple loses 140, I believe 136 should be next. Okay, so that is my view on Apple. Now, central bank around the world are having this very clear movement. And what is that? That is basically the hiking cycle. So we go back into history. The last time we see the central bank around the whole world is doing such a hike itself, right? It's back in 1988, where the banks were all hiking non-stop, and then after that itself, right, that was where they pull back. So the last time we see something is at 1988, and that is where they prior to the 1987 crash. So now we are now much higher, and of course, obviously itself is a big problem, right? Because when everyone is hiking rates, definitely it will cause a lot of costs, heavier costs to all businesses, and definitely, right, earnings will deplete. That's the reason why you can see right now that there is the S&P net earning revision index is coming off. Okay, although the banks are doing a pretty okay, but the remaining companies are not doing well. And you can see every time when you have the numbers coming down to the same level, we'll have the recession. So I cannot doubt that we're going to see a big recession coming in. You can run away. And of course, we may have to see going down much further before we see a bottoming out effect. And usually when that happens itself, right, the recession is near the end. So that's the reason why I felt that another 2-3 months, we will definitely see a global recession. And because of that, earnings will be affected. And of course, when stock price goes down, why not? So now that's the issue here. The put and call premium since 2000 shows that whenever the put options are very high, usually we'll have two things. Usually the market will go up later, okay, later. But you must understand that this one is not really feasible to use, because after that itself, right, from this period of time right here, all the way was QE, all right, QE was involved. So a little bit incorrect here. But the point is this, if you look even carefully, there will be a spike down. Okay, there is a spike down effect before the market bottom out. So if you ask me now, look at the option, the put option market here is so huge. Now, some people is arguing that because it's so huge, right, the boys may not want you to make this money. Hence, therefore, very good chance the market may rebound. Well, you are not wrong to say that. But the thing is this amount is really too big. So somehow I felt that it could be a trap. And that will actually really push and capitulate the market, because now everybody is so bearish. So something, a catalyst or some problem happen, bang, the market may really go down. Then we have the recovery. Okay, so this is how I feel about this market, but it can be totally wrong. So we need to watch the market very closely. All right, this is no joking matter. So if you look back at the S&P chart, which I covered yesterday, you can see right now we are now basically hovering very closely at the moving average. All right, this is actually very important. Now the last time we see something like this, you notice that the RSI came down to 30 mark, right? And of course you can see the market actually spiked down. So I felt that we may really need to see this happening, then we can have the huge buying coming in. All right, so this is very contrary to different people, but this is my view, and I think that we are pretty near to this as well. So what do you think, guys? Let me know in the comment box, okay? All right, so that is how I see for the market, and let's look at the chart for today, shall we? Okay, let me get my PowerPoint up. Okay. All right, let's look at the market right now and see what do we have for today. Okay, so now what we are seeing is that we have a very incredible movement just now by the China market. There was some grapevine speculation that they may consider to, do a bit of inbound, reduce the inbound COVID restriction. Okay, meaning allow people to come in. And the market just went ballistic. Okay, my goodness, the China A50 shot up by almost 400 points. Well, that's 3% move in just less than 10 minutes. Okay, I was shocked, that. But you can see right now, oh my God, it's coming off. So most likely this may not actually follow through. And this is bad news, because at the time itself when the market was shooting up, the stock market or the futures market was going up. So that could actually bring more selling later, because this is not good, yeah? All right. And if you look at today's Dow Jones today, right now, for today's Dow Jones, we are having a strong resistance at MLP at 30,614. This high is at 609. So take note of this, guys. If the market actually loses 30,166, we may see going down all the way to 29,936 MA30. At the moment now, my KSI and my KRW is still on the buying side. So guys, we will see selling, but we'll see a rebound. So this reason why the market is still holding forward. But once the market loses 30,166, the selling will come in. So this one you have to take notice, guys. Okay. The NASDAQ here itself is showing a lot of support right here at 10,971. This morning, the low went to 10,966, and that's where the China news came in. Right, the KSI is showing me that buying is still there, but my KCX, my KRW shows flat and turning negative. So once the market loses 10,971, I believe there'll be some selling all the way down to 10,682. So traders, you really need to watch this, okay? And of course, we can see right now on the S&P 500. Now S&P 500 strongly supported at 3686. This is the BMB RL level. Yesterday it came down and got itself rejected over here. But KSI stays red. But KRW is cyan. So we have a mixed bag here. Now, simply put, if today S&P 500 loses the opening price of 3697, which is now, most likely is to come and test 3647. Okay, 3647 most likely will be tested later today. For Hong Kong, well, let's take a look at Hong Kong right now. Hong Kong just now shot up because of the news, and you can see here, let me just show you the news, shot up the news, and now have given back almost all the gains. So this is not good. If it covers the gap, small selling is going to come. All right, okay, and I want to show you is oil market right now. Okay, the oil market is moving a bit higher. Okay, now the thing is this is not a good sign. If the equity market is coming down and the crude oil is going up, that means that this is going to pressure the market. So if crude oil goes higher, for today, what is above pivot 1, right? It can go all the way to $88, okay? So this is going to be pretty interesting because we are seeing the dollar also moving up at the same time while crude oil is also doing that. So that means that something is not correct, and I don't like this movement. When you see that crude oil going up and equity market coming down, this is going to be bad news, okay? Let's look at the 10-year yield, okay? Let me check to the day chart. This is not good sign. You can see the 10-year yield is still going to move higher. It's not now, it's even higher now, 1.14. Okay, this is not a good sign, and of course we can see that the dollar is now there's a pullback at this moment right now. But then again, this is pretty usual for in the morning session. If the dollar recover and goes up again, and if crude oil still goes up, that will be very bad. Okay, so watch out for crude oil for today. Yep. And last but not least will be the Bitcoin market. Just a quick one. Now, Bitcoin market now this morning has dipped below the 19,000, but strongly supported by the pivot 2 now. So as long as market stays above 19,000, you're okay. But take note, if the market loses 19,000 again, I'm still looking at it to go 18,472, and that will definitely smash down the NASDAQ further. Okay, KSI and KCX, both of them are not good. Okay, this is Kel signing off. Wish you the best, and remember what I say. Okay, bye-bye.